Hello, my name's Adil. I'm bringing you a review of the German DAX from an intermarket analysis perspective. Okay, so basically, how do we explain this vicious sell-off, substantial sell-off? I mean, we're looking at a high of 9,900 to almost 8,700 towards the close on Friday after hours. Okay, so one hell of a sell-off. Okay, one hell of a sell-off. What do we attribute it to? There's numerous reasons we can attribute it to. Ebola phase, obviously, which is at present. Lack of QE for Mr. Draghi and Miss Merkel's hawkish stance, and given the fact that she won't agree to Euro bonds or QE, and given the fact that Mr. Wiedemann obviously has been talking against ABS purchases, even let alone QE, so certainly doesn't bode well. And we can also attribute it to the budget frenzy or budget phenomenon right now. So we've got France, whose budget was rejected late Friday, and from a pro austerity to a pro growth budget. Miss Merkel wants everyone to be more prudent, and obviously that's not occurring. So they're blaming the lack of growth on severe austerity and cutbacks, etc., and there needs to be a balance in between. Okay, so there is a shift now slightly from Merkel towards a pro-growth budget as opposed to a pro-austerity budget, so that should be interesting. But she isn't budging with regards to QE, which obviously Europe desperately needs, given the fact that it wants to fight off deflation. The only concern that I have with regards to the German DAX continuing to fall quite substantially is the fact that the euro has fallen. So the euro is not acting like a stimulus, which is quite surprising. As you can see here, sell off in the euro, and then obviously sell off in the DAX as well, which is almost mirror. So technically, from an economic theory point of view, it should be the opposite. So that's a conundrum. Okay, as a trader, that's one hell of a conundrum. Okay, we've got the ceasefire in Russia right now, Russia-Ukraine. So that should certainly have alleviated a lot of the concerns that the German DAX was under. And obviously there's a path open there now for potential sanctions to be lifted. So that should certainly be a positive as well. And that's not transpiring or materializing in the markets either. Okay, so given the fact that the US markets are obviously, the US economy is certainly growing, and given the fact that the demand for German products will come from America, and given the fact that the Chinese economy Chinese PBOC has signalled a potential to be more dovish recently with the upheaval with regards to Mr. Zhu, so on and so forth. And obviously the Chinese economy certainly, Chinese stock market certainly remaining afloat and being strong. Obviously with regards to the Hong Kong protests, obviously now the concerns there alleviated as well. And given the fact that the NFP data last Friday was relatively strong, and all the economic data that's been coming in has been quite strong as well, and given the fact that the Fed remains dovish, so it's a Goldilocks scenario, then therefore the US market should certainly head higher, and the European markets generally tend to follow. Which, again, that's not the case. So there's a lot of reasons here. Okay, so I've explained lack of growth. So IMF obviously downgrading, which we know this week. But again, that was an old story, nothing new. It's just stating the obvious. We already knew that the market was already been factored into the market. So we've had more than a 10% correction, almost 15% now, and yet Miss Merkel still remains stubborn. So interesting. That's what I'm going to say. Interesting for now. So where are we headed? So they're the headwinds I've explained. Okay, so we know the sanctions are biting Germany. We know the higher euro was biting Germany, but that's not the case anymore. And obviously lack of growth in the eurozone and lack of growth globally is obviously hurting exports, and obviously Russian sanctions are as well. So there's a lot of factors here at play. So weak economic data, although the economic data that's coming in is all lagging, and given the fact that the euro has dropped quite sharply, that should certainly reverse the fortunes of the export sector for Germany. Okay, so that's certainly bear that in mind. So where are we then? Okay, so let's have a look at a weekly chart, given the fact that we know the fundamentals now. Ebola concerns, ISIS concerns, lack of growth concerns, lack of QE concerns. So these are all factors at play. So we've broken this key level here at 8,990, and obviously we've broken the next support level, which was 8,900, which again I'm very surprised. I didn't expect us to break. Okay, so we have to deal with it now. Okay, given the fact that we've broken, now what do? We've broken this key trend line as well. Obviously we've already done that. So what happens now? From my perspective, given the fact that the euro is continuing to move lower, I can't see how that's coinciding with the DAX moving lower. So that's a conundrum for me. Okay, so whether you want to call this a false breakout, that's what I would like to attribute it to, a false breakout. I just cannot fathom that concept. Okay, the fact that the euro's lower and the fact that QE still remains on the table, even though Miss Merkel is a staunch critic of it. Okay, it certainly could reverse the fortunes in Europe. Okay, obviously fighting deflation, etc., etc. So again, we'd have to play it by the ear. Okay, let's just see how the Asian markets react on Friday or over Sunday night. If they do manage to bounce, and obviously that just certainly changes the scenario with regards to that from that perspective. But for now, we have to. Price action is basically telling us what the psychology and the sentiment in the market is, and at the moment it's not exactly good, because everybody will be pointing out to his H&S. Okay, every Tom, Dick and Harry now will probably more than likely be quoting this H&S formation, the German DAX, looking for a potential sell-off to 200 MA, and that's what gets me worried. Okay, because that's ripe for a short squeeze. Okay, so that's basically where we are on the weekly chart. So the daily chart, okay, we've broken this key level. That's fine. Okay, we just have to react now. Okay, as a trader. So the next level, previous resistance equal support is there, and obviously you've got gap fill. So your next level of support is your gap fill support. You can see here, which is 8724, and that's exactly where we are. So from a daily chart perspective, there's certainly an argument there for a potential bounce from that 8724 level. Then the next one is 85 region, and then obviously you've got this gap level support around the 8500. So that's something that we're going to watch out for. So daily chart, watch out for this gap level support around the 8725. Okay, 8725. That's something that we watch out for. 10-minute chart. Where are we? Okay, so let me just get rid of all this. A lot of jargon here. Okie dokie. Right. Okay, so where are we? So let's just go back. Put our gap levels in here. Gap levels in here. So you can see, I mean, pivot S3 was even taken out on Friday, which is quite, very, very. We don't see that often. Okay, so basically that's where we are right now. We've got an unfilled gap here. We've got a unfilled gap up here. We've got a unfilled gap here. That's all for now. Obviously you've got a gap there that remains unfilled, so we need to watch out for this here as well. So there's a lot of gaps. 1, 2 and 3. Okay, so a lot of gaps that need to be filled. Okay, so you've got that gap there, that gap there. That's fine. Okay, so that's something that we're going to keep an eye out for. Okie dokie. Okay, so that's basically what we're looking for with regards to the German DAX. Let's just have a look at a 60-minute chart beforehand. So 60-minute chart, obviously inverted head and shoulders pattern failed. That's why the market sold off, given the emotive sell-off. And now we are coming into this gap fill or support zone. Obviously broke there as well. The market still remains lower lows, lower highs, and obviously the lower channel support around this region. So again, it's hard for me to be bullish right now. I have to see exactly how Asian markets respond, but that gap certainly will remain open, 8788, given the fact that the futures have fallen all the way down to 8700. So that gap level certainly needs to be drawn, and we'll see exactly if that gap can be filled. Okay, that's basically where we are with regards to the German DAX. Now, rather than looking at the German DAX, because technically it does remain very, very weak, except that's a gap level at 8725, let's have a look at his European counterpart. So one of the key one I always observe is the European stock 350. Okay, given the fact that it's a broader spectrum of the European indices, okay, or European equities. So we are into horizontal support from the Euro Stoxx 350, so watch out for that. Weekly chart is into support, daily chart is into support, so certainly looking for a potential rebound. 60-minute chart, we are still within this bearish continuation or bearish potential stroke bearish pattern, and the market certainly remains bearish from that perspective. We've got a downward sloping expanding wedge pattern, so certainly doesn't bode well, and lower lows, lower highs continue. There's no other potential move in sight here, although we were trying to put a potential higher low in here. Let's just have a look here. The market opened here 750. Okie dokie, so that's basically where we are, and the markets are closed there, so nothing really Nothing even on this chart either, so I can't even I mean, you can argue here, provided obviously the futures rebound quite substantially, that yes, there is an argument for inverted head and shoulders pattern, provided we don't take out as low at 13.15. But again, even that's quite weak given the fact that the futures markets are down substantially. So only thing that we could hope for is, if you are in the bullish camp, is for a short squeeze over the weekend based on the central banks. We've got Draghi speaking and we've got a Fed member speaking, so based on that, let's have a look at the CAC, see if the CAC is, I mean the CAC you can see horizontally is into support here, 4070, and you've got support at 4050, so there's two levels of support. Weekly chart again has broken its key level, but there is support at this 4050 region. That's the key one. If that breaks, obviously we are into previous resistance, equal support, horizontal support, so that's certainly an argument there for it to be into support. Euro stocks 50, yep, we're back into this support level now. For support level at Euro stocks 50, 2970 and 2950, and obviously if that breaks, then we've got down to 2920. So multiple, given the fact that the H&S formation has been hit, so therefore we're looking for a potential short squeeze. Same thing with regards to the French CAC. If you go to your daily chart, and you can see that the high there was around the 4,500, you're looking at 4,350, so the H&S target has been hit on this occasion as well. So given the fact that the short squeeze is certainly due, and that if that's the case and the targets have been met on the downside, then therefore one would come to this assumption that the European markets certainly are into support and certainly need to reverse, obviously vis-a-vis the German DAX, and given the fact that it's into its gap level support at this region here, 8725, and looking for a potential bounce. Okay, we have left an unfilled gap above, so we've got two unfilled gaps at 9210, then we've got an unfilled gap here at 9,000, so they're the two gaps that must close with regards to the marketplace. Okay, so that's something that I'm going to keep an eye out for with regards to the market. Okay folks, so risk on, risk off, wax on, wax off. Goodbye now.